Hey guys, Autumn and Heather here. And we were having a conversation the other day about taxes and the benefits of owning a home and what those really were. And so I was like, you know what? I'm not the best person to explain this. So I called Joo Young and he sent over a whole list of all of the benefits and everything. And we thought we'd share them with you. And the big thing is, I want you to meet Joo Young. Joo Young's in a networking group with myself, and he is amazing. He's my personal accountant. He's our team's accountant. He's fantastic. He's just a wealth of information. And I wanted you guys to hear all these tax benefits directly from him because we think it could be very beneficial to you. So Joo Young, I'm giving you the stage.
Yeah, thanks Heather for having me on. It's definitely a pleasure. Oh, Autumn also, thank you for having me on. It's a pleasure to be here with you and really to be able to share with you and really be able to navigate the benefits of home ownership and for existing owners and for future homeowners. Thank you for the opportunity for allowing me to share with you the benefits of owning a home. So let me begin by telling you a little bit about myself and our firm. My name is Joo Young Kim. I am the president and managing director here at Deduction Accounting. We are an accounting firm based here in Alpharetta, Georgia. We are just about 30 minutes north of Atlanta. And we actually specialize in helping our clients navigate through the complex accounting and tax issues so that really they may be able to maximize their profits and minimize their tax obligations. Really, in short, what we strive to do is we try to help our clients put more money in their pockets. So that being said, yes, when Heather brought this question up to me, I was very excited about the topic and the question because you actually have a whole slew of benefits for owning a home. But before I begin going over these, probably my favorite tax benefits, I kind of want to first quickly talk about standard deduction versus itemized deduction. And at the end of this, I'll explain why this is very important. In the US, anyone and everyone who is required to file a tax return is entitled to either take a standard deduction or an itemized deduction. And usually, 9 times out of 10, if your total itemized deductions are lower than your standard deduction amount, you want to use the standard deduction amount because that's a larger deduction that will go against your income. However, there are certain situations where even though your total itemized deductions are lower than your standard deduction amount, it could still be advantageous to use the itemized deduction amount. And the reason being is because of your state taxes. For your federal taxes, if you're using a lower itemized amount, you may either receive a lower refund or you may have to pay a little bit more in taxes, federal taxes. But from a state perspective, the itemized deduction calculation may be more favorable for you. So all in short, when we take your federal and state returns and add them together, even though we're taking a lower itemized deduction, at the end of the day, you might be paying less overall taxes. I know that's a whole throw up there I'm tossing at you. If you have any questions, you can email me. Well, the reason why this is so important is because for many homeowners, even though you are taking the itemized deduction and even though you think your itemized deductions are lower, it could still be beneficial for you. So these 7 tax tips that I am about to tell you, it's actually more beneficial for a lot more people than you think. So that being said, let me kind of go over with you the 7 tax benefits of owning a home. Okay. Number 1, mortgage interest. Mortgage interest payments are tax deductible. Unfortunately, in 2017, the Tax Cuts and Jobs Act lowered this threshold from $1 million to $750,000, but you are still allowed a deduction for the mortgage interest that you are paying to your lender on a month-to-month basis. Okay.
And that's just the interest payment, not the whole mortgage payment.
Yes. Correct. Your principal amount is not deductible. You're absolutely right, Heather. The principal amount is not deductible. It's only the interest portion. Another thing to consider is if you are looking for a HELOC, a home equity line of credit, the interest paid on this HELOC is also deductible, as long as you use the proceeds for the improvement of your home.
So like if you were going to refinish your basement or something, you can use the proceeds for that.
Correct. If you're using it for maybe extending out the outside deck and making it into a sunroom, or like you said, finishing your basement or replacing your roof, those would all be deductible.
Nice.
Tax tip number 2, the points that you pay to your financial institution, that is also deductible. So there are some situations where you might have to pay a fee to lower your interest rate on your mortgage. 1 point or 1%, right? So 1 point costs 1% of your home mortgage amount. So for example, if you take out a mortgage of say $300,000, 1 point will essentially cost you $3,000. These points that you're paying at closing, the lender will add them to your closing costs, and these are also deductible on your return. Another way to look at points, or there's another reference to points, is sort of mortgage origination points. What these are fees paid to your lender for processing your loan. Okay, and these are also deductible. I get a lot of questions. Okay, how do I know how much points did I pay? Where is this? Is it on my closing statement? Do I have to reach out to my closing attorney? It will all show up on your closing paper, your settlement disclosure statement. But also when you receive at the end of the year, you should be receiving a 1099 or 1098, my apologies, showing the total interest paid amount for that year. It will also show the total points that you paid as well. So now point number 3, property taxes. Much like personal property taxes or ad valorem tax that you pay for your car, trucks, boats, what have you, real estate taxes are also tax deductible. Now, I hate to refer going back to this 2018 or 2017 Tax Cuts and Jobs Act, but they limited this. They have a ceiling of $10,000. So if you're in a county, or you're in a state where property taxes are significantly higher than $10,000, you are going to be limited up to $10,000. But it definitely is a deduction that you should be aware of and make sure you take on your return. Let me caveat this by saying this 2017 Tax Cuts and Jobs Act, it will expire in 2025. That's the good news. We'll just kind of have to see what happens in 2023, 2024, if Congress decides to either extend these rules, or if they are going to just let it expire. Okay. Number 4, home office expenses are deductible. So for the most part, a lot of people now are working from home. So this is something you definitely should explore and really seek to take advantage of. Okay. But let me say this about home office expenses. You have to be working in your home regularly and exclusively for work. Okay, the key word here is regular and exclusive. The IRS is pretty strict on this deduction. So there is a tax court case where a gentleman used one room in his home for work. However, because a bathroom, which his children occasionally used, was attached to this room, and because the only way to access the bathroom was through the room, the deduction were disallowed. He would use the room specifically just for work, but occasionally his children would need to use the restroom. So they would, I guess, walk down the hall, go through his office room to get to the bathroom. And because of that fact, they disallowed it. So that just goes to show how strict the IRS is on these rules. But personally, I would say since the COVID shutdown and since a lot of people are working from home, I would have to say the IRS either needs to revise this or update this rule to reflect current times, right? It just doesn't make sense for me.
Well, especially with so many people intentionally moving and buying new homes just to get a place that they can have a home office.
Yeah.
So,
Right.
so many people are shifting to working from home all the time.
Yeah, that is, for some, that's a selling point,
Mhm.
I can imagine, right? If there is sort of maybe a detached room that they can use as a office, that would be, I think, the best.
Definitely ideal.
Your dream ideal is
My dream
room
idea.
above the garage, totally detached.
Exactly. Yeah, 'cause it's so tough. I've talked to a lot of my friends and colleagues who have worked from home, and it's very difficult to compartmentalize. Wait, I'm at home, but wait, I'm also working. At what point am I home resting, and what point am I home working?
Yeah.
The anxiety there. Yeah.
Mhm.
So
Brutal.
brutal. Point number 5, improvements. Home improvements made to your home can be used to offset capital gains when you sell your home. Now, keep in mind there is a home exclusion amount of $250 if you're single and $500,000 if you're married filing joint. But I can imagine with the housing boom and prices going up for some of these properties, maybe 5-10 years down the line, your gain is more than 250,000 or 500,000. So
I read an
I would
article
say,
today that some properties have gone up as much as 19% as of July.
wow.
It's insane. Yeah.
I mean, it's wonderful for all these homeowners.
Yeah.
Now, Joo Young, so long as they reinvest that into the next house, does that apply?
So this is what will happen. Any improvements that you make on your property, such as a new roof, HVAC, or an add-on to your house, all of these will play into reducing your capital gains. So let's say, for instance, you purchase a home for $100,000, you put another $100,000 in for improvements. So your cost is $200,000. let's say 5 years from now, you go to sell that property for $500,000, then you essentially have a capital gain of $300,000, okay? Which is subject to capital gains. But if you're married filing joint, you're within the $500,000 home exclusion. So you don't pay any taxes on that. It's only if the capital gains are more than $500,000 will you be subject to tax. So let's go back to this previous example. The cost that you put on the property is $200,000, and you end up selling the property for, say, $800,000. Then you have a gain of $600,000. So up to $500,000, you don't pay any tax. But that difference of $100,000, you are going to be subject to capital gains. So keeping track of your improvements will help lower that capital gains. In this example, if you just purchased a home for $100,000 and you ended up selling it for $800,000, then now your gain is $700,000 as opposed to $600,000. So I would say keep a good track of your expenses and hold on to those records so that come time to report the sale of that property, you have nothing to worry about.
Yep.
So
That would include things like kitchen renovations or finishing a basement or anything of that nature.
of course, absolutely.
Even going all the way down to the improvements we have sellers make when they're preparing their house to list. I always tell them to keep track of all the repairs and expenses that they have, because oftentimes we have to have them like fix small things to get it ready and shown condition.
And all those things come into to play here. The cost basis would be the purchase price of the home. It would include really all the minor repairs and maintenance to prepare the property for sale, along with the large expenses of renovating the kitchen, the master bathroom, finishing the basement. Those things will all apply. So
It's good to know. Yeah.
okay. Tax benefit number 6 is energy credit. So, what's up with that?
I love that one. I don't know. I just never.
You're all,
Yeah, I'm excited about this one.
well, I'll just simply say this. Make your home green because it helps the world to be clean. So, if you're into solar panels, granted, you have to check with your friendly neighborhood HOA. Our HOA does not approve anything related to solar panels. But what was that?
That's so crazy.
I know, right?
Like you'd think they'd be like only on the back side of the house.
You know, as long as we can't see it, it's fine. But no, it's. I guess they just can't make an exception because that means it opens a can of worms for everybody to request an exception. So, if you're into solar panels, if you make any improvements related to saving energy for your home, that deserves a credit. So with that as well, good record keeping, make sure you have all the ducks in a row. You'll encounter a lot of heating and air salespeople coming by and saying, hey, they market it saying, hey, you'll receive an energy credit and stuff like that. Just make sure those qualify before you make that large purchase. Okay.
Also, like insulation in the attic.
Yep.
And does appliances like qualify for that, or?
Appliances do not. Yeah, appliances do not. Okay. Last but not least, penalty free. I kind of just tip number 7, penalty free. What this essentially means is the general rule with IRAs is if you want to pull money out of your IRA, you're going to be subject to first, income tax, and second, you're going to be subject to early withdrawal penalties for pulling money out of your IRA. But if you use those funds up to $10,000 to purchase your first home, though you may have to pay income tax, you do not have to pay the penalty, early withdrawal penalty. So if you are looking to purchase that dream home and you're short $10,000, a good way to take care of that issue is by pulling money out of your IRA. Granted, my certified financial planning friends will push back and say, no, you don't want to do that because it's better to put that money in the market and let it grow. The benefits of allowing that money to grow is more beneficial than using it towards a down payment. But just an isolating incident, if we're talking about home purchase and you found your dream home and you reached out to Heather and Heather got the best deal for you, and you're about to sign on that dotted line and you're short 10 grand, just pull that money out of your IRA, because this is the largest purchase you're ever going to make in your life, and you want to make that right purchase. And if it's only going to cost you $10,000 more to buy it, just do it, right? So this actually also, yeah.
What did I just say earlier? In the last 14 months, properties have increased 19%.
Exactly. You might get 6-7% in the market. You're gonna get 19%. There you go. There you go. Yeah, unless there's another like Dogecoin where you're gonna balloon up to 2,000-3,000%, then right, just keep it in there. But that's a one-off exception. The interesting thing about this is this actually also applies to people who haven't owned a principal residence at the time of this past 2 years. So if you own a vacation home, but it's not your principal residence, then this rule still applies. You can still pull money out of your IRA and use it to purchase a home because it's not a principal residence. It's not the home that you're living in. So that being said, that's tax tip number 7. I sort of want to leave off with this. And this is sort of what's been on my mind since Biden became president. So in his journey to the presidency, he mentioned something about a first-time home buyer credit. And right now they're calling it Biden's $15,000 first-time home buyer act. And from what I understand, it's still in Congress right now, hasn't been made into law yet. But what this essentially means is the government is encouraging people to buy their first home. How are they doing this? They are giving you $15,000 to do it. So it's up to $15,000. So I think the calculation is 10% of your purchase price. So if you're buying a home of that's $150,000, then you would have gotten the max of $15,000. Okay, so add that into your equation when you are looking and shopping for homes. Even though you may have a down payment of say $30,000, because of this $15,000 credit, which again hasn't been signed into law yet. But once this does, think of your down payment as $30,000 plus $15,000, because that is the credit that you will receive from your taxes. So I leave you with that. Please stay tuned for the latest updates on this Biden's first-time home buyer credit. So that being said, any questions?
This was amazing, Joo Young. you're like the ideal person that's going to be listening to this. What questions do you have?
I mean, I'm 23 years old and right now I'm renting, but if slash when I was looking to make that first move, obviously I'd be very enticed by Biden's $15,000 first time home care.
I didn't throw in the 10,000 from your IRS and you're like, boom, done.
Yeah, there you go.
Yeah.
But yeah, I mean, I learned a lot, being a younger generation. I'm just now starting to do my own taxes. So I was really intrigued to just learn more and get a general understanding. And there's so many little credits that are out there that I feel like so many people don't know about. So it's good to talk about and listen to.
For sure. I'll say this about people who are renting. And I had this conversation with a client of mine who is a lender as well. He's an underwriter. And I kind of asked him, hey, so the market is booming and housing prices are through the roof. Do you think there is going to be another crash? Do you think there's going to be a correction? And his thought was, there is not going to be a crash, but maybe a minor correction. And he kind of compared it to 2008. The reason why so many people left their homes and started moving into apartments was because renting apartments were really cheap back then. So am I going to pay a $2,000 mortgage or $2,500 mortgage payment when I can move into a 3-bedroom apartment for $1,500? I'll just let go of the home. I'll figure out my credit later and move on with my life. Right now, from what I understand, apartment rentals or apartment rent is pretty expensive. It's very comparable to a mortgage payment, right? So his kind of basic logic was people are not going to let go of their homes, because why would they want to let go of their home and move into an apartment when their rent payment is going to be just as much?
Mm-hmm.
So people are not going to let go of their homes. If not, they're going to try and keep it. So that was sort of his logic behind there's not going to be a crash. People are not just going to throw away their homes. People are not going to be upside down on their loans. And
especially because so many people have so much equity in their house right now.
oh yeah, for sure. I mean, for me personally, I think in the past year, my equity grew by like 30%. I was just so blown away by it. So that being said, if you are, I guess PSA alert, if you are renting an apartment and it's not really a far ways, if you're just thinking, how am I going to make a mortgage payment? Actually, it'll either be the same or it could actually be lower. It could be less than a mortgage payment. And you would, as a real estate agent or a loan officer, you're going to be their heroes for life. So yeah, a perfect example of the same client I was talking about. This lady was paying up almost $1,800. My client did the loan for them and their mortgage payment came out to $1,200.
Drop mic.
Yeah.
Yeah, I can definitely
wow.
attest to that. I recently looked around in the spring, and then our operations coordinator as well just looked in these past 3 months. And there's limited supply. Like, it is hard to find apartments. They're at like max capacity, and the prices have jumped so much. People who have lived there last year have said that their rent has increased by $300-400 just in the past year to maintain their apartment.
Not even get into what my rent was versus what y'all's rent is now. 10 years ago.
Exactly. My rent back in the day was $750. I got a 2-bedroom.
I know, mine was like $800 and I had a 1-bedroom with a den. I was like, this is great.
Exactly. Oh yeah, that's right. Mine was that. 1-bedroom with like a den / or whatever you want to use that space for. So.
It is not that cheap now.
It is not.
It is like $2,000
It's not.
for a 2-bedroom. And I'm like, oh my God, I could be buying a house with this money.
Exactly.
Yeah.
It's crazy. Joo Young, thank you so
Uh,
much for your time. This was amazing.
Thank
Not
you.
a problem. It's my pleasure. I know on the mic, off the mic,